when you get a lot of people who want to sell it versus a lot of people who want to buy it for the price of anything, what should happen? What should happen? You know objectively what should happen. And what should happen is we go down. The price goes down of anything. That's generally what is required for the price of anything to go down. A lot of people, not who sell it, but who want to sell it standing in line versus the people who want to buy it. Now, when you get that, when you recognize that, and most people don't, but these triangles that you're going to see and that you guys have seen for the last couple of weeks show in real time the adding and pulling of live orders that are close to the last traded price, but they quickly compare where the other side is. Not existing limit orders that have been there a while, but fresh orders that come when the price gets close, when it gets real. So they're now serious buyers and sellers. If you know the answer to the question, what should happen, then you also know the answer to the question, is what should happen happening? So think about that for a second. If you first have a tool to realize that set up a particular scenario, and indeed there are a lot more sellers in line versus buyers that are trying to buy, then the price should go lower. And it should go lower pretty quickly. Like price should be afraid of a big pink triangle, meaning it should run away from it to the downside. So here we get an example of a minus 600 pink triangle, which is pretty extreme and what we found to be pretty large. And just watch what price doesn't do for a second. Here it is. Bring your eyes to this moment right in here. And it's just rotating back and forth. It gets a 450, kicks lower. Well, it's coming back up there. And you're going to see a minus 605 imbalance of the amount of sellers who want to sell it versus the amount of buyers who want to buy it. Boom, right there. And does price skip lower quickly? No, not yet. If that doesn't get you to scratch your head, let me pause it. Nothing will. So when people talk about, I want to read order flow, I realize order flow is what I've been missing, and reading order flow is what I've been missing. And I got to read the dome and all this stuff. You can go down a lot of rabbit holes trying to figure out what these numbers mean. But it all comes down to understanding the difference between buying and selling filled versus unfilled, long and shorts, which are people's positions, and the effect that that has on a market. And if you don't understand those concepts, then you're going to have a hell of a time predicting the price that adheres directly to those concepts, period. If you're a good detective, which is what traders are, we're good detectives. We're trying to predict what's going to happen next. A good detective knows clues when he's interviewing a potential suspect, whether or not he has the right guy. Clues, whether or not they're lying, and whether or not the next question, what the next question should be. What's the next move in price after you see this? First of all, you have to put yourself in a position to see this because you're not going to see this looking at the dome. You're not going to know this is the time to answer a question because you're not going to hear the question. This provides a question. Where should price go? The answer is down. Okay, is it? It certainly is in here because it's above it. But you could even answer it right here. Does it skip lower when that minus 602 comes in? Doesn't skip lower. And as you watch these, you'll see it skip even on lower imbalances, let alone this one. The only place it skips is higher. And if that doesn't put you in a position to predict this next move, then what will? If this doesn't put you in a position to say, I predicted this move because of what I just walked you through, and it doesn't seem like a good guess, doesn't seem like I got lucky. But now you're finally reading order flow to make accurate predictions because they're objective tools.